What's going on, everybody? So let's take a look at the market. So the market, the ticker symbol that I'm going to be focusing on is the NASDAQ 100, the triple Qs ETF. Why am I going to focus on that? Because that's predominantly the stocks that I trade: the Apples, the Teslas, the Microsofts, the AMDs, the Googles, Netflix, so forth and so forth. From that, so another nasty sell-off. At one point in time, the futures were down 400 points on the day. However, can we be looking at an end of the year Santa Claus rally? Is the rally still on? In my opinion, yes, the rally is still on. So today, what happened with the market? The triple Qs are down 1.5%, 1.74%, $6 on the day, as much as 2% on the day, I believe, close to 7 or 8 points on the day. So here's what needs to happen. Okay, monster push going into the close on the triple Qs. Okay, so if you've been following my videos, you know that, or you're in my Discord, which that link is down in the description box below. Please join the Discord. I'm trying to help out as many people as I can, and it's just fun and better to trade with other people. I'm predominantly an options trader. I trade big tech, but we do have people that in there that do swing trades as well as trade equities as well. But with that being said, the area that I've been preaching about in my Discord is that 380 level. Okay, so that 380 level on the NASDAQ 100 was going to correlate with the 50-day moving average. If you've been playing the stock market for the past 2 to 4 months, you know that we've been on an insane rally since realistically the beginning middle of October, when we first reclaimed the 50-day moving average back here on October the 18th. We've pretty much been on an insane rally up to the upside, did come back, broke down below the 10-day moving average, quickly reclaimed that in 2-3 days, and then put in all-time highs, a little bit of a blow off top here at 408. Okay, with that being said, we did have news come out. We had the new variant. We have so much different catalyst with, the president, the Fed chair, Jerome Powell, inflation, so forth and so forth. The VIX spiked up to over 30, 34, 35, whatever that may be. But with that being said, we knew that we were due for a pullback. We knew that we were due for a little bit of consolidation. So by taking that into account, we are not in full correction territory yet. If we were to lose the 50-day moving average, for example, let's say today we lost the 50-day moving average. Next week we have a little bit of a bounce, and then we give up the 50-day moving average, break through 378, and start treading lower, maybe 375. Then I would say we're in corrective territory, because with that move, we would have given back all of the gains going all the way back to October. So you're talking about 2 months worth of work that the triple Qs did was all erased in a matter of a week. Okay, that's not what you want to see if we want to see this market push higher. However, also, I understand some of you guys who are holding longs, maybe you guys who have longer term swing trades, maybe some of you investors out there have been feeling a little bit of pain over the past week and a half. I understand that. You need to stay patient. If you do have holds that you're holding for longer than 3 to 6 months, I would not even pay attention to the market, okay? Until we start losing that 50-day moving average, until the bears really gain control of the market and start pushing it lower, I wouldn't be too concerned. The level that I wanted to see hold was exactly what happened today. This $380 level, the 50-day moving average. Into the close, the bulls rallied close to 100 points in that last hour and a half of the market. Insane push. So with that being said, are we out of the woods? Is everything going to be great come Monday? No. But could we get a potential bounce come Monday? Of course. Could we get a bounce on Tuesday? Of course. And could we even come back down and test this 50-day moving average once more at around $380? Of course. That would all be perfectly healthy. If I do just pull up the hourly time frame here. Okay, let me pull up this hourly time frame. Let me move this little drawing that I have a little bit. So what I have here is this little demand zone. Okay, this little gray box down here, we came down today 8 in the morning, touched it, 9 in the morning, touched it, 10 in the morning, touched it, 11 in the morning, touched it, and obviously the last hour of the day we were inside this demand zone, and then the bulls just surged and kind of engulfed 1, 2, 3, 4 hours worth of candles. Where did we stop? We stopped perfectly at the 10-day moving average. Guys, if you're not using technical analysis, if you don't believe in it, if you think it's all a bunch of shit, you're absolutely, you're insane. You're just, get with it. I don't care if you think the market's going lower. I don't care if you think that the market needs to hit all-time highs tomorrow. Get with it, guys. There's certain things that the market needs to do in order for this market to go higher. There's also certain levels that we need to stop at if we're going to go ahead and go lower as well. It's just the name of the game, guys. Stocks go up, stocks go down. The main thing as retail traders that we need to do is we need to prepare ourselves, and we need to understand these levels where potentially these stocks can stop, potentially where the market is going to take a breather, potentially where are we going to find support and where are we going to find that resistance. That's all we're trying to do, and we're trying to just get in where we fit in somewhere, whether if you're a day trader or a scalper, somewhere on the short side, somewhere on the long side. It doesn't really matter. Money is money at the end of the day. It's not like we're betting for the economy to crumble and everything to go to zero and to go into some deep dark recession or depression or whatever. That's not what we're talking about here, guys. We're trying to make money just like all the institutions, any hedge fund, any long-term investors. We're all in this to make money. You need a good deal. If you're a long-term investor, long-term investors are not going to buy stocks at all-time highs if the stock market is going to go higher. Does that make sense? If you're a long-term investor, are you going to want to buy at all-time highs because the market is going higher, or are you going to want a sweet deal? Are you going to want that Black Friday deal? Are you going to want that deep, dark discount to where if the market is going to push higher, you can have it at a discount? And if the market decides to go lower, well, then you kind of have an area where you're going to absolutely stop out and kind of wait for us to find our base. So just getting into next week, is the Santa Claus rally on? It very well could be. Could we see some sort of a bounce on Monday or Tuesday? I'm almost 100% positive that we're going to see some sort of a bounce. Okay. Now, here's the problem when it comes to bounces, especially when you have such aggressive selling like we had today. When we get those bounces, okay, we are going to get another dip. There is going to be another pullback. So with that being said, when we do get that bounce, that does not mean, okay, it's over. We're just going straight to all-time highs, going to hit 408 on the triple Qs, and that's it. End of story. Of course not. So the level that I'm looking for here on Monday, the triple Qs, I'm looking for the triple Qs to give us a nice little bounce on Monday over 383, 384. Now, where is my first price target? It's not going to be that far up. My first price target is going to be 385, 386. We got to go step by step, and we got to reclaim this 20-day moving average here on the hourly time frame. I'm speaking from a short-term perspective, week by week. I'm not speaking for next month. I'm not speaking for 6 months down the road. What I'm looking at here is something for next week. We are going to have a ton of resistance in between this 385, I'll just call it 386, between 386 and 387. That's going to be the sweet spot where we're going to expect to get a bounce into these areas, possibly 386, come up to 387, and then have another little bit of a pullback. Okay. I wouldn't be surprised if we get a pullback all the way back down to 383, 382, allow these moving averages to come up, allow that 50-day moving average on the daily time frame to move up to get over that 380 mark, potentially 381, 382. The more time that we sit and consolidate, the better it is for the rally. So get some stocks on watch for a potential bounce. The stocks that I want to start with myself personally is the stocks that were strong this whole time when we had the pullback. Stocks like Apple were absolutely insane. Very, very strong. The semiconductors, AMD, NVIDIA were exceptionally strong. They had a little bit of a pullback with the overall market. However, they didn't break down and lose any significant technical levels. Then we can start looking at stocks like Amazon or Tesla or Netflix, who's absolutely got destroyed over the past week and a half, 2 weeks. That thing came all the way down to the 50-day moving average, lost that 50-day moving average, and then, tried to give a little bit of a bounce. Stocks like that, I believe if we have this rally, they can be potential long swings. There's a lot of growth stocks as well that have been completely slammed. So if we are going to rally, you're going to want to start to get together a list of good stocks that, the company and everything moving forward is going to be good. I'm not talking about this bullshit. I'm not talking about, these meme stocks like a Wish or like, whatever else you guys play, that's a meme stock. I'm not talking about that kind of crap. I'm talking about solid companies. You know, that's why I'm trading these companies, you know, Apple, Tesla, Google, you know, the companies that we know. If Microsoft, these companies, when they take a dip, we understand where they're going to dip to. If they lose that level, well, then we know where they're going. And if they start to reclaim some of these levels, we also know where they're going. So definitely look for a bounce here. If you would like to try to play the triple Qs, let's look for a break of 383, 90, 384. Let's potentially take some 386, something around 386 and 387 calls, something in that area. For a potential little bounce there, and then I want to come up to this 387, potentially trade around sideways, maybe knock our heads here at 388 area next week sometime, and then pull back once more. But what I do not want to see is I do not want to see a bounce. Okay, this is what I don't want to see here. I don't want to see a bounce like that looks something like this. Don't want to see that. Okay, so if we get this bounce up in this area, okay, because we know we're going to have a lot of rejection in this area. If we get a bounce up here, get rejected, that's completely fine. But I don't want to see us start to lose this area again down here that we need to defend, which is that 50-day moving average. So what I would like to see, something like this. Okay, maybe something like this. Okay, a pullback to this 380, 382, 383 zone, and then I want to start to see this. That's something more what I would like to see going into the end of December. Again, we're going to have pullbacks, guys, but we need to find that next leg of resistance. We could even do something like this as well, where we kind of come up here, kind of back test a little bit, breakdowns, people start to get panicked again, and then oh, looks like we're going higher. No, we're not. And then we come down to the 50-day moving average on the daily time frame, kind of start to chop around here. As long as we don't start losing this area, we're going to be fine. So this is going to be okay. This is okay. And then back test back up. Boom. That would be something more what I would like to see over the next week to 2 weeks. I hope that helps, guys. Guys, if you are experiencing a little pain, relax. It's okay. Take your eyes off of the screen for the weekend. We're going to be okay, guys. We're going to be fine. The market's not going to zero. I understand if you're feeling a little bit of pain right now, it's very, very hard to look at that P&L. You just have to stay patient. You got to go with the waves that the market is giving you. When you do get those pops, even on long-term swing positions or long-term investments, it's okay to trim, guys. If you're up, 10%, 15%, 50% on your portfolio in a certain position, it's okay to trim a little bit, trim 5, 10%. You can always buy back down on an area of opportunity like this when the whole market starts to pull back. We get about 2 to 3 of these pullbacks a year, guy. So we just have to deal with it and we have to be prepared. But, if you're experiencing that pain right now, it's okay. Average down a little bit on your strong positions. And there's a lot of good buying opportunities coming up here. So I hope you guys all have a great weekend, and I will see you guys all on the next video.